busy business week starts today. Let's get started as we speak. The Central Bank's Monetary Policy Committee is meeting for the third time in 2017, and most of the forecasts and projections says they will keep their fingers off the interest rate button because, quote unquote, according to Maritime Securities' 7-page report released over the weekend, FX stability remains a priority, and that seems to be working. So the Central Bank will see to keep these fingers, punch that very quickly, much more harder. Perhaps that will translate into other areas. So tomorrow will be the session day, Tuesday the 23rd in the afternoon, 2:30 thereabout local time here. You expect to see that here on Channels Television as we follow that very closely for you. Focus today, 2:30, when the market closes, or just before the market closes, the Nigeria Exports Promotion Council will present its zero oil export plan proposal to the management of the stock exchange and close the trading day and have some minutes of chit-chat with the stockbrokers on the trading floor. The MPC says Nigeria can survive with zero oil exports. That's a very ambitious plan under Segun Awolowo, who is the head of that government agency. But you've got to listen to him once again today. And tomorrow morning, 10 o'clock, the Bureau of Statistics releases its first quarter GDP numbers, giving us an idea whether Nigeria really exited recession in the first quarter, the first 90 days of the new year, January till the end of March. We're now technically getting to the end of the second month in the second quarter. So will the look-back figure give us an idea of what the look-forward figure will look like? Tomorrow, Dr. Yemeka, the man you see his picture there on the TV screen, will be the one talking about that very important and long-awaited economic data. On Wednesday morning, the acting president, Professor Yomi Oshibajo, will hold an interactive forum in Abuja with senior, mid, and level public officials to discuss the new 3 executive orders he signed on May the 28th. That's last week, Thursday. He will provide further explanations as, according to a press statement on Sunday, there are a lot of media requests and comments about how will these 3 executive orders actually play out, since we have a number of deadlines within those 3 executive orders. In particular, the Apapa port should become 24-hour operational within 30 days. Okay. Then you have the ease of doing business registration on the Corporate Affairs Commission should also take place within a number of days. So with deadlines and timelines, how will these become lifelines? And that's what the acting president will explain to the media. And according to the press statement, we expect this to be a live television interactive forum. It's going to be a very busy week for the acting president. So he finishes in Abuja on Wednesday. He's most likely going to be in Lagos on Thursday for the LCCI Presidential Policy Dialogue with the president of the Nigerian Stock Exchange, Agboje Ike Imokwede. The Ike will be the chairman of the dialogue, while the acting president will deliver the keynote address. On the same Thursday, in the afternoon, 12 o'clock, in the Asset Management Corporation releases 2016 financial statements to the analysts and the media in Lagos. And the same Thursday is going to be a very tiring day. Traffic in Lagos will be very heavy on Thursday. Let me warn you ahead of that, because with the acting president, with the LCCI and the Lagos itself, the landlord, holding is starting its 2-day international conference on investments toward the next 50 years of Lagos, with Aliko Dangote, Femi Otedola, Patu Tomi, and the head of a few regulatory agencies, and the big boys in the advisory business, PwC, Accenture, and the rest of them, with entertainment and digital media executives like the CEO Paga in attendance. Expects the downtown Lagos, where Obianiju Sofa comes from, to be very, very hectic on Thursday as well on Friday. All in the countdown to Buhari's midterm report. May 29, the office of the acting president says there's going to be a report card that will be presented on the May 29 on the social investment programs of the Buhari's administration. That's next week, Monday, a public holiday for business and markets here in Nigeria. But here on Channels, we never sleep. Do we? Obianuju Unsafo is an investment analyst from Afrinvest, and she's live in the studios. Good morning.
Good morning, Boston.
I don't envy you on Thursday. It's going to be very heavy, isn't it?
Yes, it is.
You folks always deal with that when the big boys are in town and there are conferences all over the place. Okay, talk to us. Where do we start? We have so much to talk. Sometimes I get confused where we should really start. We have the MPC, we have the first quarter GDP, then we have the executive orders. Why do you think, or do you think the MPC will keep fingers off the interest rate button tomorrow?
We at Afrinvest, we believe the MPC committee would maintain status quo on all rates. I mean, they are meeting for the third time this year, and for the previous times they've met, they've kept rates constant. Yeah, so what they're going to be deliberating on is activities in the global front, as well as activities that have played out in the last MPC meeting in the domestic front. So looking at the global front, we have the US Fed. They are set to meet next month, and there's the possibility of them raising their benchmark interest rate. I mean, we saw them do that in their March 2017 meeting. They raised their interest rate for the second time in 3 months, and there's a possibility of 2 more rate hikes before 2017 closes. So what this means is that there's going to be a reversal of capital flows from emerging markets as well as SSA regions. I mean, investors are looking at higher yields as against investing in riskier assets in these regions. So that's one of the key issues they're going to be looking at. Also looking at oil price, it has been relatively stable. I mean, thanks to the OPEC and non-OPEC deal. They're also set to meet this week, and that's to extend production cuts to as far as 2018. So we believe that oil price will range between $43 a barrel to about $53 a barrel based on this. So coming down to the domestic front, I mean, you look at the key indicators. Let's start off with inflation rates. For the last MPC meeting, they were looking at February inflation figure, which was at 17.8%. If you look at April's figure, it has moderated to 17.2%, which is largely attributed to the high base effect. I mean, although core inflation has reduced, we see that food inflation has been pressured. I mean, it's currently about 19.3%. So it doesn't give any signal for them to do a monetary easing. Then you look at the all share index. As at the last MPC meeting, it was about 25,000 points thereabout. As of last week, it was 28,000 points. That's the highest in about 10 months. I mean, so month to date, we are about 9.1%, and year to date, the all share index is about 4.6%. 4.6 has returned 4.6%. I mean, then you look at external reserves. As at the last MPC meeting, it was about 29.6 billion US dollars. As of now, it's about 30.72 billion US dollars, which is an improvement from the last meeting. You look at the interbank rates. The CBN has successfully kept rates there very stable. I mean, with their daily intervention, they've been able to provide dollar liquidity that segment of the market needs, and hence keep rates there stable. Then you look at the parallel market. As of February ending, it was about 455 to $1. I mean, last week, Friday, it closed about 380 to $1, which is a huge appreciation. Then looking at the new kid on the block, the I&E window, it's about 380 to $1, which just shows it has been successful since its launch in April ending. I mean, there's a bit of convergence between the NAFEX rates published by the FMDQ as well as the parallel market rate. So these are all the indicators the MPC committee will be looking at to make their decisions.
But let's break it down a little bit. Yes. Let's go back to the global front and look at the geopolitical issues, the interest rate decisions in the U.S. and the price of oil, the Wednesday meeting, Thursday meeting by OPEC.
Okay, yeah.
Keeping cut back till first quarter. The peace in the Niger Delta and a ramp up in iron output and the exemption that we're still enjoying. So we have both the price enjoyment and the production bonus, as you think. So externally, do you think we have a bit of a quiet, no issue that should push the central bank to either cut interest rate or raise it?